Welcome to the show. Well, Moshe, let me start with you. What are you expecting from Infosys itself on Tuesday? Would it be flattish or would it be a quarter-on-quarter fall in revenues?
Well, Infosys, as you know, already reset guidance a couple of weeks ago. They did tell us that that revenue numbers for the March quarter will be at the low end of the range. They did say that a host of issues, including a skill mismatch, will potentially impact the beginning of fiscal year 2015. So, I think all in all, probably the most important number that Infosys released is going to be their guidance. And the question here is, how much below, NASSCOM's expectations for sector growth they're actually going to guide. And I think at this point, my guess is as good as yours.
Nitin, Mohta of Macquarie is also with us. Nitin, come in on this point. What could be construed as a negative surprise in the FY15 guidance that Infosys lays out?
Sure. First of all, thanks for having me on. IT analysts are not clearly the flavor of the season. The 6 to 8%, I think, is where the street has pretty much settled. So I think, there are analysts on the street expecting the guidance to be as low as 5% for next year. So in my opinion, I think we are going to see a volatility in the Infosys stock price when they report results next week. I'm actually in the camp which believes that there could be a positive surprise when they give out guidance. I would not hesitate to put a probability of 20 to 30% that the company might give a guidance of double-digit revenue growth next year.
Moshe, there was one brokerage which said that they would watch the hiring numbers very closely. A net hire of 4,000 would be taken as positive. How much weightage do you give that number, and what is your estimate?
Well, I think the hiring numbers are fine. I mean, whether it's going to be 4,000 or 5,000, I think that's a separate topic. But I do think the most important thing for Infosys right now to take care of business is going to be to bring down their attrition rates. And again, when you're running at such high attrition rates for a couple of years, ultimately that impacts your ability to staff projects, i.e., your ability to convert bookings into revenues, and that seems to be the major issue here. So you can talk about big numbers today for Infosys in terms of how many people they're going to bring on board, but if they won't be able to fix the high attrition rates, it doesn't really matter at this point. So I would look for some management commentary on what they're doing internally in order to fix these things, just to make sure that talent doesn't leave and stays on board. And I think that's going to be important.
Yes, that has in fact been the big talking point as far as Infosys is concerned. But Nitin, I think you should give yourself and the analyst community a little more credit. I mean, all of 2013, IT analysts were the big flavor of the year. So if you're out of flavor for just a couple of months, I don't think that's going to hurt anyone too much. But you said that some analysts are talking about the possibility of a 5% guidance for FY15, lower than the 6 to 8% that everyone's expecting. If Infosys talks about that or hints at that, then what could the fall be in the stock price? I'm just trying to understand whether all the worries are already in the price, or is there a possibility of more correction?
Sure. If the number comes out to be 5%, then I do expect the stock to have a negative reaction. Having said that, don't really think it to be, more than a 3 to 5% correction. Now, the reason why I think I'm positive on Infosys is the risk-reward is quite asymmetric. If the company does give a better revenue guide as compared to 8% number that most have in their mind for higher end, then I wouldn't be surprised if we actually see a positive reaction of 5 to 10%. Even though it's going to make Infosys back to its volatility on the quarterly earnings, but I think there is a fair chance that we actually get a big positive bump on the day of results.
You agree with that, Moshe? 8% plus would be a positive number in terms of guidance, or would you still insist that it is the attrition fix that would be your big talking point?
Look, we have an outperform rating on Infosys. From conversations we have had with investors, we believe that Infosys is going to be in a penalty box, or at least for a couple of quarters, regardless on whether they got for 10% or 8% or 9% top line growth. as long as the number is not going to be some sort of a crazy, 5% or 4% top line growth number. I think there is given the revenue reset, it does bring back memories from, Infosys before Mohta came on board. And I believe that will place the company in a penalty box for a couple of quarters. So I don't know if we're going to see a big rally in the stock. I think the stock is probably going to be, maybe it's going to be some rally if the numbers are going to be a bit better than expected. But as I said, the internal operating metrics numbers are going to be very important for people to kind of gain some confidence in the company's ability to execute.
Nitin, can I get back to you on, the way you started this conversation, that you are not the flavor of the times. How do you explain the manner in which NASDAQ has moved both overnight and the previous fall it had a few days back? Is this just cleaning of profit, or is there any trouble fundamentally with the IT space?
Sure, not really the expert on the Nasdaq technology stocks, but what I did see was iGate reported decent numbers and the stock was up, overnight. So I think, it might be a little bit of a, tech stocks when people talk about Nasdaq listed tech stocks, a lot of it was the internet related names which have had a phenomenal run last year. So, as the kind of sector rotation that we're seeing in the Indian markets could be something related to that, but that's not my area of expertise, so would refrain from, making a broad brush comment there.
Fair enough. What's your expectation from TCS this time, Nitin? Because they guided for weak growth as well, and they specifically pointed out the slowdown in the domestic business. How are you approaching the results? What's your view on the stock? And what would be the commentary you would watch from Chandra this time?
Sure. Two things over there. First, obviously the fourth quarter, caution that the management striked in the analyst meet ahead of the results was largely driven by a weak performance in the domestic business. Specifically for people who were bullish, including me on TCS, we had expected that the kind of climb down that we had seen in the December quarter, we will get some kind of a low base on a sequential basis for that performance to actually improve in Jan-March. Clearly that hope hasn't really come through, and which I think is going to be hurting the TCS performance. Now, having said that, what exactly would I be watching out for? Even in the meet, TCS quite managed comment about fiscal 15 going to be better than fiscal 14. I think the new data point to watch out would be they have always talked a lot about the new opportunities coming from SMAC or digital, whatever fancy name people would want to use. I think an estimation on the revenue side for that is going to be something which will be very helpful to the investor community in general.
Okay, well, let me just rattle out the numbers we have got in the poll, Nitin. Revenues expected, dollar revenues at $2,100 million, $2.1 billion. EBIT expected at 3,258 crore, that's almost flat. EBIT percentage margins, EBIT margins at 25.13, and the net profit expected at 2,835 crore. Are they in line with your expectation, and which would be the one number that you may consider a disappointment if it comes way below this?
I think, more or less, we're not really having a big deviation from the numbers that you talked about. I think the number which I would be very keenly watching out for is going to be the dollar revenue growth number, because I think, what we need to give credit to the TCS management is in terms of the way they have been able to manage margins so far. And, while I'm mindful that currency might actually start appreciating post the general election results in May, so far in this quarter, it's very difficult to get a negative surprise on the margin front. So I think my eyes still is going to be on what kind of a growth they actually report, especially excluding the India business.
All right. Nitin, Moshe, thank you very much for joining us and preparing us to understand what Infosys will tell us on Tuesday.